The simplest way to think about blockchain is anybody who's done anything in finance, you know that ledgers are everything, right? Like, what is your bank other than a bunch of ledgers that track its assets and liabilities? Your broker is the same thing. Every company has a balance sheet, etc. The problem with the world today is that a lot of the ledgers that we use, while they might look like they're very advanced and digital, they are using the same exact design that's been around for 50 years at least, if not even longer. And they don't take advantage of certain unique attributes of the world today. Like, we all have some kind of a computer, right?
Mm-hmm.
Most of us in our on our desk or maybe even in our pocket. We're all connected 24/7. Borders don't really matter that much anymore because information travels seamlessly. I actually don't even know where you guys are located, but isn't it interesting that it doesn't matter, right? Like, we
And
could
you
be
never
halfway.
will know. We will not tell you. No.
That's usually what the people who have a lot of Bitcoin say because they don't want to get hacked. Um, so blockchain to me is just, if you were to sit there and say, I want to invent a modern financial ledger that takes advantage of all the technology and digital and fancy goodness that the world has to offer, you would end up with a blockchain. For example, um, we all know that, like, if you're working on an Excel spreadsheet in your computer, you should back it up, right? You should have two copies, and like most companies have some redundancy. But in a world where everybody has a computer and is connected, why don't we all just have our own copies? So the Bitcoin blockchain, which is really just the ledger that tracks, like, this person had one coin and send it to that person who then sent half of it to somebody else. There are thousands and thousands of copies of it all over the world. I actually have my own copy of it running on a little computer called the Raspberry Pi on my desk right here. And that's just, it adds resilience, right? Like, the more copies you are, the better off everybody is. Um, Alternatively, cryptography is used to make a blockchain and what we call an append-only ledger, a fancy way of saying once you can only make new entries, you can't delete existing ones. So for anyone who's worked in any setting where the audit trail matters, this is actually a great feature. It's just you keep adding to it, but you can't change the past, which is fine. Like, you could still make mistakes, but then you need to now make a new entry. You can't just go back and delete it. So this is just one of many trust building features of blockchain. Other features include the fact that everything's totally transparent. So I could actually literally go look at my little copy of the ledger here, and you can just pull up one of God knows how many websites that ping data from a copy of the ledger, and we can look at every single transaction that's ever happened. And that's a way that we can build confidence in using this. There are a few other features. Most people probably get confused about this whole business of mining. Like, what does it mean that somebody mines Bitcoin?
Right.
And to summarize that, because the goal was to have a decentralized ledger or payment system, not have a corporation or government in charge, the hardest question to answer was, like, how do we update it, right? Like, everything I described so far, me having my own copy of an append-only database that's fully transparent, that's well and good, but how do the 10, 15,000 people that are currently keeping the Bitcoin blockchain alive agree on what's a valid transaction and what's not? This is actually an interesting field of study that goes back decades to the early days of computer science. How do you get computers to agree on stuff? Particularly in a world where somebody's computer might crash and somebody else might be trying to actually intentionally trick the other computers because they're trying to steal coins or commit fraud or something. Mining is the admittedly complicated but still elegant way where volunteers are tasked with checking, like, if I'm sending a coin to Justin, to make sure that I didn't already send it to Arusha. And then because we don't even know who the miners are, it's decentralized, everyone's anonymous, financial incentives are used. So what we understand as Bitcoin inflation, everybody's probably heard that, like, there's only ever going to be 21 million Bitcoins, and the number that gets created every day gets cut in half, blah, 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 every 4 years. That's literally bribing the miners to do an honest job. Because one of the biggest innovations of Bitcoin is this idea that in the absence of an authority, you can use financial incentives to achieve honest outcomes. And as proof, I submit the fact that the Bitcoin ledger has been updated, I don't know, hundreds of thousands of times in the last 10 plus years. There are now something more than $500 billion worth of value on it. Billions of payments get made every day. The network itself has never been compromised. It's never made a mistake. It's never been down, and it's never processed a single fraudulent transaction.
Wow.
That's a pretty good track record.
Yeah.
So you bring up Bitcoin, and now that we know the kind of the basis, the transparency, the redundancy and accuracy and everything, how does that translate into a currency? Like, why use blockchain to create a currency, and how does that work exactly as a currency?
So the funny thing about the invention of Bitcoin, like this anonymous person, Satoshi Nakamoto, if you go back and read their work, they actually were not trying to invent a new currency. Like the original Bitcoin paper that launched this whole thing only mentions the word currency once. They were trying to invent a decentralized payment system. Like, it was this question. It was 2008. Financial crisis was raging. Banks were on the verge of collapsing. So the challenge was, can we build a digital way to send something of value back and forth without relying on an intermediary? And then it turns out, to make a decentralized payment system secure, you have to also give it its own currency. Really, just because what I said earlier, you need to bribe people to be honest.
Mm-hmm.
And the way you bribe them is by having your own money that you can, or the protocol, the algorithm prints a little bit. So that introduces this idea of Bitcoin as a currency. But it's important to know that you can't separate Bitcoin from the network. I've heard people make this argument like, well, why can't we just have the same idea of a decentralized network, but only have dollars on there? The answer is because we can't print dollars to pay miners to do an honest job. Only the Federal Reserve gets to print dollars. So this interesting symbiotic relationship between the network or the platform underneath and the currency on top is both something new and fascinating, and also very confusing, because then it gets to the question of like, well, what is that currency worth? How do I value it? Like, I know, well, there are models where I can try to value $1, but then Bitcoin is very different from $1. Bitcoin is also a byproduct of the network effects of the underlying network, right? Like, everybody knows, like Facebook and Twitter and YouTube, a lot of their value is from this idea of network effects, because a lot of people rely on them. Bitcoin also has network effects. It's just there's no Bitcoin Inc. whose stock you can buy to capture that value, so it ends up accruing to the coin.
And so what was like, so in 2017, that's probably the first time it really attracted mainstream kind of attention, when it went on its first initial run. What was kind of the big catalyst that got it going? And I think it hit 20,000 or close to 20,000 at that point before correcting a bunch.
There's actually been a couple of those kinds of boom bust cycles. Well, more than a couple. It's been like every couple of years in the history of Bitcoin.
Yeah.
There's a boom bust cycle. And usually it has to do with some combination of people realizing that blockchain technology is actually useful. Sometimes even not even for like Bitcoin, right? Like one of the things that propelled the price moves in the most recent bull market was that a lot of central banks are actually now experimenting with using some version of this technology to digitize fiat currency. And while on the surface that sounds like, oh, it's competition for Bitcoin, it really like blesses the idea of Bitcoin,
right?
This new way of having digital money. And historically, things that have had macro events, other than the adoption of the blockchain technology, they've included things like in 2013, there was a banking crisis in Cyprus, where the banks were sort of bailed in that like some of the depositors' money was confiscated in order to fund the bailout. I believe, if I recall correctly, back in 2016, 2017, one of the drivers was capital controls in China.
Oh, wow.
And people because Bitcoin's decentralized, it's a lot harder for a government to restrict access to it.
Yeah.
So people were using it to get money out of China.
Wow.
But it's usually multi-variable. So like the 2020, 2021 rally, part of it was like this idea of Bitcoin as an inflation hedge.
Right.
Then there was this idea that for the first time, institutions were beginning to adopt it. There were some famous hedge fund managers that bought it. And then the application of the technology continues to sort of like move downstream, and people keep finding new ways to build new things on blockchain technology.
Mm-hmm. So I'm glad you mentioned this idea behind the inflation hedge, and of course, El Salvador famously, kind of said, okay, we're gonna adopt Bitcoin as one of our currencies, and a lot of people have been talking about it as an inflation hedge, a store of value, all of these things. And I mean, we just got into some pretty high inflation, and Bitcoin didn't really seem to give an inflation hedge there. Why not? And are we thinking, are we maybe giving it too much credit of what it can do at this point?
So with the caveat that I am not a macroeconomist, although I have played one on YouTube before.
Okay.
You can play one here anytime you want.
Right, exactly. This will be on YouTube, so
Yeah.
yeah.
Okay, perfect. Then this is my domain.
Yeah.
The interesting thing about it's true. So far this year, we've had a lot of inflation, and Bitcoin is way down. But as far as I can tell, so is everything else, including gold is way down. In fact, I think I saw that gold has now given back pretty much all of its post-COVID gains. Stocks are down, bonds are down, real estate is turning. I think like the strongest asset this year has been the US dollar. And one of the few things that have been stronger than the dollar is the Russian ruble, which is actually up on the dollar since the invasion started. So the first conclusion I make from that is nobody knows anything, particularly when it comes to macroeconomics. But the second one is that I think something that can be an inflation hedge, whether it's Bitcoin or gold or stocks or rubles, you have to measure it across the span of years, and you have to sort of factor out the noise that you get in the short term, because markets are a discounting mechanism. So presumably, a lot of the inflation that we're seeing today in things like the CPI report was priced in by assets like Bitcoin and gold last year.
Mm-hmm. Yeah, and so when we were talking yesterday, you had a really interesting analogy that I think it made a lot of sense to me. You talked about looking at because it's not necessarily just Bitcoin, and Bitcoin is kind of the granddaddy, right? It's kind of the stable one in this whole world.
Relatively stable.
Right, exactly, relatively, exactly. Versus a number of these other coins that have even gone bust. And so you used an interesting analogy about early stage equity starting a restaurant. Why don't you share that with everyone? Because I think that really helped me kind of understand where we are in this phase right now of crypto and Bitcoin.
Even though Bitcoin and a lot of these other cryptos are called currencies, they really are these experimental projects, and the applications have now moved downstream to the point where people are trying to design crypto projects that actually do just what corporations do, like cloud storage. Well, because blockchain is this ultra efficient digital technology, one of the things it lets you do is whatever the unit of value is, right? Call it a currency, a coin, a token, that's semantic, right? Whatever the thing is that people buy and sell, you can issue it from day one, and it can start trading from day one, and it can have price discovery from day one. Like that's very different from like most even successful early stage startups. They raise money in the private market. So maybe they have like a fundraising once a year where they get a price put on their shares. A lot of these crypto tokens just start trading right away, even like before the project sets to launch. And that's this cool idea that you now have liquidity and price discovery on early stage equity. So the analogy is like, imagine if someone opened a restaurant and issued tradable shares on that restaurant from day one, right? Maybe even before they open their doors. What you would see, first of all, is crazy volatility, because who knows if this restaurant's even going to make it. So a little bit of news like, oh, they got the liquor license, that would make the stock soar, right? And then it's like, oh, wait, no, the oven's going to be delivered a month later than we thought. Now the stock's going to crash. So I use this as like a filter for a lot of the noise in crypto. I think eventually the projects that do survive, which again, going back to the restaurant analogy, most restaurants in the long run won't make it, right? Most startups don't make it. So most of the crypto projects out there won't make it, not because they're bad, but just because that's how startups work. The ones who do make it, I imagine some years from now will be a lot less volatile than they are today, in the same way that the shares of like a popular restaurant chain isn't that volatile.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.